You about to get these Bitcoin ETFs, these crypto ETFs. They about to go crazy. Here's what I'm about to tell y'all, bro. The Bitcoin people and the crypto people about to attack us. They about to tell us we in this outdated stock market. They about to tell us that cryptocurrency is worth more than the stock market. They about to tell us that all the banks own trillions of dollars in cryptocurrency. They about to tell us all that because Bitcoin at 33. If Bitcoin hit to 40, you are now about to see a flood of crypto investors. They're gonna flood us. I wanna save you the breath. There's nothing you can say to make them feel otherwise. Here's the thing about it. Does it have potential to be an equalizer for, of course it does. But here's what I also feel like. I also feel like because the banks are buying it up so much, they're taking away what it was intended to do so they can still control it. Now listen, we probably gotta call 19 Keys on the line, right? We probably gotta call like the, I don't know, his name might be Crypto King _. I don't know what his name on Instagram. Somebody, maybe the Bitcoin doctor. I don't know. We got to call them and they got to tell us all the utilities that it do, right? But here's what I do think. I do think you should own it, but here's why I can own it. Watch this. Here's why I can own it and keep buying more of it while it was dirt cheap is because I wasn't trying to get rich off it tomorrow. If I'm being honest with you, bro, this thing could go to $100,000. It was at 69,000. I remember like within the last 3 to 4 years, bro, I remember it was like $5,000. To see it hit 69,000, I'm like, bro, that could be $100,000 thing. I ain't mad at it. But watch this. I'm not thinking it's gonna be 100,000 tomorrow. You feel me? I'm looking at maybe about 2028. I could be wrong, but that's the vision I put on it. Like that's the sight I put on it. Like, all right, like 2028, So now I'm not worried about it at all. Right? I'm not worried about it at all. And watch this, B. I don't have to go out my way to try to buy it when it's running. Because when it was sleeping, that's when I was buying it. Okay, let me put you in the mindset of this right quick. In order to build wealth, the true and structural way to build wealth is to buy assets when they're cheap. That's the way. But most people, when assets cheap, they want to run away from it because they don't understand that this is the opportune. Ooh, B, come on, B. Bro, I'm slinging words today, right? This is the opportune time to buy it. So when it was down to like 19,000, 18,000, I spent a few bucks on it. I dropped a pretty penny on it. You know why? I didn't care. I was like, one of these years, it'll be $70,000 again. You feel me? That's what we need to be doing. The thing about this thing is this, though. When it runs, it runs. Now, I will say that about this. Stocks don't run the way this run. I will say that 100%. Stocks do not run the way that this run. This is different. This is, when it run, it's to the moon. Listen, when it run, it's to the moon. But it falls the same exact way. And so that goes back to this, B. Understanding the identity of the asset class that you in. This is why we took the idea of you don't got to be right, you got to be in position. That's why that makes so much sense, right? So watch this. In Patreon, why did people in the Patreon make a lot of money? Because every time the market ran, we was in position. When NVIDIA ran them 2 times crazy, we had got into it a week or 2 ahead of time. We didn't know that was going to happen, but I'm looking at it, I'm like, ooh, my things are lining up, we in. Taking off. In the Trappers Anonymous, when we in certain plays, they take off. Why? Because in essence, what we doing is we buying it when it's at a discount. Most of my option plays is when the market falls. Oh, the market done fell. Boom, let me see what's going on. Ah, got it. That's how we win this game. If the Bitcoin was at 19, I don't want to get it. I don't want to wait to 33 to get it. I'm trying to catch momentum. And if I'm trying to get it at 33, I done missed it from 19 to 33. That's why my biggest W came at. Being it at a 19, hitting it from 33. That's why I done double what you know what I'm saying? I'm there. But I said all that to say that when Bitcoin hits $40,000, just know that the Instagram, the TikToks, they gonna flood us. They gonna say that if you're in real estate, you're stupid. If you're in stocks, you're stupid. If you own a business, you're stupid. If you're doing anything other than owning Bitcoin and crypto right now, you're stupid. That's what they're gonna tell us. So I just want y'all to be mentally prepared for what we about to be up against. All right, let's go a little further, Dave.
What's good, trappers, man? It's your boy, the Wall Street Trapper. Right now, I want to invite you to an amazing experience full of value. That is my community, Trappers Anonymous. It's 100% the greatest fundamental investing community on the market. Listen, your portfolio should be a masterpiece. And the only way we get you there is if we help you to learn how to invest with confidence. Now listen, I get it. Like, you don't know a lot about stocks, or maybe you've heard people say how much money they lost in stocks, but I can guarantee you, one, because they weren't in the community, and two, they lack the information. Our goal in Trappers Anonymous is to help you, really to hold your hand on the journey to becoming a confident investor, learning how to navigate through the different events that the stock market goes through, to take you from panic to encouragement. There's no better time than now. This is an opportunity only for those who are willing to be on the journey. So listen, man, click the link below. Come join me in Trappers Anonymous, man. I will see you in one of our many classes, whether it's Moat Monday, whether it's the 2-hour class we do on Sunday, or whether it's just a book club. Everything is geared toward making you a better investor so you can triple your net worth and turn your last name to an asset. It's your boy, Wall Street Trapper. See you in the trap.
All right, Tesla locks in another one. Tesla and Toyota have signed an agreement that lets Toyota use the supercharger network. Now watch this. At one point in time, Toyota was looked at as the Tesla killer in so many ways. Not saying that they was going to bring up a car that was going to defeat Tesla, but Toyota had the infrastructure like nobody else. Toyota even came out and said, yo, we got a battery that we about to create. The battery gonna allow a car to go 733 miles and charge in 10 minutes. But another one bites the dust. So Tesla now locks in a deal with Toyota. So now that puts them in position now. Tesla now will release 12,000 charging stations to Toyota and Lexus. They also just unleashed some charging stations to Hyundai, Kia, and BMW. They made a similar transaction. So now we got Hyundai, Kia, BMW, Toyota and Lexus, GM, Ford, Rivian, and Volvo. That's why in the Patreon, in the quarterly 10 stock checklist, number 4 on the list is Tesla. You know why? They're not on the list because they just a dominant car company. I understand that. I also understand this. I also understand that in due time, somebody is going to at least fill that gap. It's hard to stay number one for so long. Like, there's always a brilliant person that's coming along, and as long as somebody keep cracking at it, somebody gonna get it, right? It's not easy, but if somebody keep on trying, somebody, Apple, Microsoft, somebody gonna bring one of these rocket scientists in and say, bro, I gotta compete with him. He by himself, right? And because his number one dealer, now, here's what happened with, this is good right here. The stock reported earnings. It missed earnings, it missed revenue, and it missed profit margins decrease, and it missed deliverables. What does that mean? Well, that is a reason why you're seeing a stock tank. Now, why is he going through that? Well, it's essentially going through that because its number one client is China. Well, we also understand what? China is going through an economic catastrophe right now. So he got to keep cutting costs so that they can stay the number one, but even at cutting costs, they not buying. The United States is not his biggest buyer. So what that mean? That mean production, nothing is going to be the same. The juxtaposition between delivering cars and being... B, B, I'm on fire. I'm on fire. I'm on fire. Watch this. The juxtaposition between being the number one EV car in the world and having the number one charging station, being the number one charging network, that's it. That's it. So, yep, so you got companies like BYD. He got big, fierce competitors in China. But then he got the Cybertruck he just dropped, right? Exactly, and I was about to get to that. He said he's dug himself in a hole with the Cybertruck. You know what I'm saying? So it's a lot going on. So watch this. At some point, you start to implode, right? So he cannibalizing from within. That's okay. But when you now have the charging station that you now make people create hybrid cars, my people in Trappers Anonymous know this. This is called, and my trap masters know this, B, this is called a network effect moat, right? A network, y'all, network, N-E-T-W-O-R-K, network effect moat. What this moat is, a network effect moat. A network effect moat is a moat where as the network expands, the more valuable that asset becomes. So let's give a couple of examples of that network effect moat. A network effect moat is one like Facebook. Why is that? Why is that the moat, Trap? Because every month, every quarter, and every report earnings, the number one rule of engagement is how many more users do you have? The more, anytime a company is judged by its users, that network effect moat is in place. Why? Because you need more people to use to give, watch this, I ain't gonna say it like that. I'm gonna bring it down a little bit. Validation to, I was about to say validity. I was about to go with it. It was in context, cuz. I was about to go with it, but I think they're gonna be like, Trap, you sound like CNBC tonight. So I had to go. I was about to go. I was about to say validity. All right, another one. Watch this. Uber. Now, Uber isn't judged by, so say, users, but the metric is how many rides, right? And here's why, that network. So it's a network effect moat. This is a great moat when you're looking at companies like, so watch this. Tesla, even though how many cars they produce is good, right? It's going to be affected more over here with the charging stations, because the more charging stations you have means you are now becoming the number one. So now you are going to knock out companies like Blink charging stations and Blink, Power Plug. You're going to now put pressure on them. You feel me? So now you're opening up, and now what happens is you're getting people on record to say, nope, I'm going with Tesla. You got Toyota, Lexus, Hyundai, Kia, BMW, Ford, GM, Rivian, and Volvo. Even your biggest competitors in Rivian and Toyota have now said, you feel me? Who else they got? Like Mercedes, Bentley, Porsche. So Audi owns one of them. Ferrari. I'm just saying he got a list of things going. So anyway, so watch this. Coca-Cola doesn't have a network effect moat, but they have a branding moat that dominates shelf space. Ooh, right? So they don't have a network effect moat. They have a branding moat that dominates the shelf space. And because the branding moat is so strong, Monster Beverage came in and said, hey, Coca-Cola, I want to be the #1 energy drink. So what I'm going to do is I'm going to buy some of that shelf space from you. I'm going to give you some ownership in my company. So I'm going to pay you cash, and I'm going to give you ownership of my company, a small stake, so that I can get some of your shelf space around the world. Ooh, we cooking right now.